Get off-market home run real estate deals. Join the club, because the off-market deal, the home run deal, the really lucky big discount rental property or any kind of property, flip, whatever it might be, is the golden goose of the real estate investing world. Once you know how to get these, and if you could snag a couple really deeply discounted home run deals, you could do anything you want in this real estate business. They're the ticket to scalability. Why is the discounted deal the ticket to scalability? People ask me all the time. They go, hey, Elliot, how do I really grow this real estate thing faster than the rest of the folks out there? I go, either one, you make a bunch of money doing something else and pour it into properties, or two, you make a bunch of money in the properties, and you do it by means of purchasing at a substantial discount. Because once you do, you can wholesale the property and collect a nice check the day that you buy it without even really buying it. You can purchase the property and refinance it immediately after you purchase it. And if you have the right banking relationship, get most of your money back without doing anything to it. You can value add the property, or you could just flip it, but you could value add the property and resell it after 1 year, 2 years, 1031 exchange, defer the taxes, roll it into a bigger project. Or you could refinance after that point in time and get a whole bunch of cash back and go and do it all over again, right? So this is all something that becomes available to you when you purchase a property with substantial equity in it at the time of purchase. Everyone who says the key is in the value add, the key is in the hard money, the key is in the contractors, the key is in the management, it's all bullshit. The key is in the purchase, right? But buying home run deals off market is not easy. That's why a lot of people can't do it. It's very execution heavy. What do I mean by that? You've got to be actually good at the things that you're doing. It's not just a matter of hustle and hard work, but you have to be very effective. It takes a skill set. There is a lot of competition out there that you have to find your way to wedge yourself in between. And it's not really a side hustle, to be quite frank with you. It's something that is deserving of much more than a side hustle. And if it stays at side hustle level, usually the person doing it as a side hustle either flames out or they're just not using their time properly and it doesn't become fruitful. So today we're going to talk about 5 myths about hunting for off-market deals that are going to make you a better deal hunter, that are going to make you maybe more effective at finding these home runs. Because really all it takes for someone that just wants to buy a little bit of real estate is just 1 or 2 good home runs a year, right? That might propel you into something much bigger. So today we're going to bust some myths that you can use as pro tips, lessons on how to adjust your off-market deal hunting strategy. And you can even maybe decide if you want to take this route, finding off-market deals, versus just sticking to your day job and buying real estate with the money that you make there, which is not a strategy that I'm opposed to. So before we jump into these 5 myths, we're going to keep this live session quick today so I can do a lot of Q&A, because you guys are going to have a ton of questions and I might be loose-lipped today, who knows. We're going to talk about coupon code. The coupon code today is home run. 1 word, all lowercase. HOMERUN. I shouldn't have to spell it for you, but I'm gonna. The coupon code is gonna be good for anything from the ACE toolkit store, right? So the deal calculator, the financing starter kit, the contract pack, all this stuff that, by the way, you should have every single one of if you are hunting for off-market deals. These are extremely useful tools at $40 a pop, guys, that could translate directly to like substantial profits for you if you're out there deal hunting. So don't skip on this kind of stuff, or at least try to get them for free. There's gonna be 25 freebies today. I'm gonna announce the giveaway after this live is reposted on my Instagram. I'm gonna post it up as a story as well. And then the following story will say, giveaway is live, click this link, go to this site, chase after your freebies. Now this coupon code is gonna expire quickly because the wolves, they're hungry, right? They attack fast, they want freebies bad. So there's gonna be a coupon code slot at checkout right above where there's a pay now button. If there isn't a coupon code slot there and the coupon isn't entered and accepted, before you click pay now, you just gave me your money, thank you very much. I'm gonna buy a couple cocktails this weekend with it. Or maybe a late night Taco Bell session, because I could probably spend $40 at Taco Bell if you catch me after a couple beers and hungry enough. So if you're there too early, there too late, coupon code slot's not gonna be there, right? By the way, course not included. It's never included. It's a complete steal at $500. Anyways, I don't know why I'm selling it for that cheap. Maybe because I play the volume game and I want everyone to be happy that it's accessible. And if you're on this live and you're interested in finding off-market deals and you haven't purchased the Virtual Investor's Guide, shame on you, because an off-market deal has so much money in it, and the lessons that you can get from that course that would make you more effective at finding them is worth so many times more than that $495 ticket that you could be leaving a lot of money on the table not having these systems in place. Because look, it's not a deal hunter's guide. It's the virtual investor's guide. It teaches you how to make decisions on criteria, market selection, your acquisition strategy, deal analysis, and then purchase and management 100% remotely. But these are all really critical parts of the off-market acquisitions process. Because I don't know if you guys noticed, but that virtual investor's guide is a consumer-friendly version of our highly commercial grade off-market acquisitions business. Those methods are the methods we use to buy rental properties at deep discounts from market value without seeing them. And there is only like a 30-minute introduction to lead generation in it. But what a lot of deal hunters don't understand is that lead generation itself, hey, how to buy data, send mailers, hunt for wholesalers, get on Facebook Marketplace, which we talk about in that guide for 30 minutes. That's actually the smallest portion about being a successful off-market deal hunter. It's really what you do on the front end to select the market, to select the product, to determine what you're hunting for, and then how to funnel it through a sales process, which is essentially an analysis process, but it's a sales process when you have leads built in, right? How to funnel it through a sales process, make effective decisions on it, and then be able to price it out. That's where the money's made on the off-market deal hunting, because a lot of people don't know how to identify properly or to process the leads that come in. Getting the leads is not rocket science, guys. So yeah, that's my pitch. If you are hunting for off-market deals and you haven't picked up the Virtual Investor's Guide, it's in the link in bio. Just freaking grab it, guys. You do one deal and like the cheapest, tiniest wholesale deal that you can't even buy, and it pays for that thing 10 times over. Right? If you do a pretty good deal, then I don't even want to talk about the multiplier. Anyways, let's jump right into these 5 myths about hunting for home run deals that we're going to bust. And as a result, you're going to learn about what to do instead, and you'll have a much better chance of snagging that, the fabled Hundy Pop that we get like 4 or 5 of a quarter, right? In addition to all the smaller deals that we do. So myth number 1, direct mail is dead. You hear all these wholesale boys talking about how direct mail is dead. Direct mail is expensive, right? We have a very good volume relationship with our mail producer, and it's like 55 cents per mail piece. It's much more expensive if you don't have that relationship. Maybe it's like 65, 70 cents per mail piece. So it's definitely expensive. It doesn't provide you with instant gratification, right? So like if you're a cold caller and people are picking up the phone and you snag a deal right there or a lead right there, that could be instant gratification. You could buy the data and chase after it tomorrow. And you gotta be careful because there's do not call list, right? That is against the law. But you could buy the data and chase after it tomorrow and potentially get a deal. So people like this cheap and instant gratification method of like phone-based marketing or internet-based marketing perhaps. But the direct mail piece, albeit expensive, albeit slower, has permanence to it. What do I mean by that? It sits on someone's counter for a very long time. And then they see it again. By the time they throw it away, you probably got your next one in front of them. And they continue to see it, feel it, touch it. And it arouses a sense of curiosity that a cold call or a voicemail or a text doesn't. Because when I get a sales call, my brain turns off. I don't even think about what they're fucking saying. And I'm a salesman for a living, right? I mean, by trade, I guess I'm not anymore, right? I run a sales organization, but I'm a salesperson by trade, and I turn my brain off when I receive other vehicles of marketing. But I get a letter that looks and feels interesting and has an interesting message on it, right? And I'm gonna crack it open. Even if I know it's the same person sending it to me every month, if they said something funny last time or they used like their real voice, then I'm gonna continue to read them even though I have no interest at that point in time in working with them. And maybe at some point I'll develop interest. So there's a sense of permanence, and there is a higher conversion rate with very, very long-term leads. With direct mail, it's just expensive. But to be quite frank with you guys, we've made millions off letters. Millions. Myth number 2. Home run deals are lucky deals. You couldn't be more incorrect about that. I think when people do this business poorly, they don't understand how to engineer a spread or, make strategic decisions around product selection, then these deals seem lucky. And they could be for some of them, for the ineffective deal hunters, right? The ones that spend a lot of money just to barely, get a multiplier on their marketing dollar and not even considering their effort. Then these deals are lucky deals. But for us, these deals are not lucky deals. It's not a numbers game. I mean, yeah, obviously there's conversion rates, but we don't even look at our conversion rates. Why? Because the selection of your product and the management of the data around it that allows you to decide what is the best deal to hunt for has a dramatic impact on your conversion rate and the inherent spread. So most wholesalers walk in and make, I don't know, 5 to 7K on a deal. We wouldn't touch 5 to 7K on a deal. It wouldn't make it into our pipeline, quite frankly. It might make it in and we're just kicking it right out. Our salespeople disqualify it in the very beginning. Maybe it's 2, 3, 4%, right? We won't touch a deal that's not 20 to 30% in spread, and we get these in high volume. Why? Because it's not a matter of luck, and we get deals that are 50% discounted, right? It's a matter of selecting a product that is highly likely to convert and has a high likelihood of a misperception of value, oftentimes because a market is in flux. And while it's changing, you can capture yesterday's value from one party and then be able to convert it to tomorrow's value with another party. So it really matters who you select as the selling party, who might be using yesterday's value, and who you select as tomorrow's party, who's using tomorrow's value. Or the buying party who's using tomorrow's value. And I'm going to leave it at that. That's a highly strategic conversation that we can go into for a very long time. But we call it engineering a spread. These aren't lucky deals, right? Or else we wouldn't get them so frequently at such thick spreads. At least once a month, we buy a property that's over 50% discounted from its as-is market value. That's not an accident, folks. Myth number three, a marketing campaign or a sales campaign, even a sales effort, is optimal at 4 to 6 touches. You hear this bullshit all the time. These freaking nobodies get on these podcasts. They've gotten like one rental property and wholesaled it or something like that. Maybe they made like $5,000 or $10,000 in a year, and all of a sudden they're professional wholesalers, and they tell you, hey, 4 to 6 touch campaign. You see it on these mailing websites, right? You can buy a 6 touch campaign. Everyone thinks, hey, I'm going to buy 6 and I'm going to stop at that point. They do it because there's a lot of effort and money that goes into marketing, right? But a 6 touch campaign doesn't make you stand out at all. You have to find, instead of limiting your marketing efforts or your sales efforts, like sometimes salespeople follow up 4 or 5 times with a new lead that came in that never picked up the phone, then they stop completely. They put it in dead, right? Which is the worst thing they could do. And the good ones who make this mistake will change their follow-up cadence to like once a month or once every 3 months after, which still won't get a result, right? 4 to 6 and then cooling off or stopping completely, whether it's marketing or sales, you're going to kill a bunch of leads. You're going to lose a lot of business. If a lead comes in and you think you want to talk to them, you got to hit them every day for a month, and then change it to every week. And then you got to get them on like a regular campaign. Maybe it's something automated so that you can follow up in some fashion. And guess what? They might call you finally after 3 months, and then you do a deal with them. For marketing, look, we've been mailing people for over 5 years straight, every 3 weeks. There are people that have gotten 50, 60 of our letters and called us and said, I got a stack. I can't tell you how many times I've seen your logo, touched your kind of thick paper on your letter, read your entertaining messages, and I'm finally ready to talk about it. And you guys seem like the only honest ones. And guess what? You've stuck around, and I can identify that you have been here for a while. So I'm gonna do a deal with you. And then what happens? Those deals tend to be the biggest, luckiest spreads. I don't know why, but the ones that have been getting our stuff for a very long time, I couldn't tell you why, but we always make 6 figures on them. And we keep those ones, right? When the spread's that big, we just don't want that kind of income on the books. We've got enough of it already, so we keep deals like that. So whether you're hunting for a rental or reselling, the long-term effort is what gets you the best outcomes. Number 4, you have to go direct to seller. You don't have to go direct to seller. That is not true. We have gotten crazy deals on Facebook Marketplace, Facebook groups, wholesalers bringing them to us. You can develop a system, certain realtors that maybe have like product that they don't want to sell regularly. It doesn't fit into their box, but it comes across their desk every once in a while. You can build a system where you are engaging with and marketing to some degree with less effort and less cost than marketing directly to sellers. A network of brokers, online community. You can literally just like scrub Facebook Marketplace yourself when you're having your morning coffee if you want. There are good deals to be had in a variety of places. And I'd say the course is not on Sellfy. The course is the very first link in the bio, by the way. I'd say the I lost my train of thought there because I saw that question. Some of the best deals we've gotten literally just like came through Facebook. You can put in a low amount of effort for the person that doesn't want to buy many deals per year, just wants to buy 1 or 2 rental properties a year. This is probably the place to find off-market deals. It's through these affiliates that are hunting, through these networks that you can just take a glance at. You just have to jump very quickly, but there are less eyes on them than the MLS, so you have a pretty good chance there. The direct-to-seller approach is for someone that really wants to be involved and active in the business. This is still active. These other sources, these the army of deal hunters bringing you stuff. Sometimes we sell properties for less than what they're worth, because for some reason we can't monetize them as well as like our ideal product, right? So that's a more passive effort there. We get a lot of deals ourselves from affiliates. It's kind of a new thing, but we've got like an army of like ace advocates out there, and I think it helps that people know us at this point. We've developed a reputation in multiple markets and kind of through the broader like online community, and they just bring us deals. But you don't have to go direct to seller to be able to get these deals, and you can do it more passively. Number 5, this is the biggest myth about home run deals, finding off-market properties. You ready? You're not gonna like this one. Anyone can do it. No. Anyone can't do it. This is not something that, so I talked to a guy yesterday. He's a mortgage broker. Does pretty well, makes a couple $100,000 a year, has some cash in the bank, wants to get into rental properties. And he's like, hey man, how can I get into, like, can you mentor me? How could I get into this business? How could I get into like hunting for deals and getting off-market deals? I told him, I said, hey, do you really want to do this? Because you make a couple $100,000 a year as a mortgage broker. If you're going to do this, you would have to do it with the intention of making more than a couple $100,000 a year so that you can go ahead and swap them out, because this is an active business. It's a sales business. And what happens with this business and people that are hunting for deals for their own portfolio is they end up creating a lot of waste and a lot of byproduct just to find one thing for them to buy or 2 things for them to buy. Right? Imagine how many letters you have to send out, how many calls you get, and then how much follow-up you have to do, qualification you have to do, deal analysis you have to do, just to get to one really good deal. Imagine how many kind of good deals you're leaving on the table. And also imagine how many deals that are really good are unmonetizable to you because you do not have like an audience. You haven't generated demand to buy these leftovers from you, right? Because why did we start marketing direct to seller? My business partner and I, back in February of 2017, we started marketing to seller to find better rental properties for ourselves. And the result was we had all these properties come in, call in, they're in our pipeline, and we couldn't do shit with them. We didn't have a buyer's list. We weren't a wholesale business. We didn't have a 1 million person online following. So we just let them sit there. We didn't do anything with them, right? And then we took the luckiest ones, and then we bought them and bought them and bought them until we ran out of money. So like 3 more houses until we were out of money because we bought them cash. And when we were out of money, we sold them. And you know what we made on those things? 5, 7. And then we're like, okay, there's a commitment here. So now let's go find buyers. Now it's 12. We were working hard at this point, right? We were working like an extra 4 or 5 hours each night, and then working full days on the weekends while we had our full-time jobs to get that 7 spread on that leftover deal that we didn't want to keep for ourselves up to 12. Not worth it, right? But eventually what happened was we developed a network of buyers that would allow us to sell things and make 20, 25, 50. And by the time we hit 50, the jobs were gone, right? 100, our biggest wholesale spread was I think like 240, something like that. And we've done several 200s. Because we invested in making it a business. It's not a side hustle. It requires a high level of sales aptitude. It requires a high level of sales process and process strategy. It is a big commitment and a certain flavor of business that not a lot of people are equipped to do, which is why you see a lot of operators out there getting deals from brokers, wholesalers, and they try to make their money on the value add. They try to make their money on the management improvements, the stabilization that they can offer. Those are more technical businesses and operations businesses. This is a sales business. It's not for everybody. It's a time commitment. It's not for everybody. It's a cost commitment. It's not for everybody, and it requires a certain skill set. So those are our 5 myths. I'll break them down one more time for you guys, then we'll take some questions. Number 1, direct mail is dead. That's not true. We've made a lot of money off direct mail. We continue to today. Number 2, these deals are lucky deals. No. Selection of your product has to be deliberate, and you have to generate demand that corresponds to the type of product that you're selecting to maximize or engineer your spread. Number 3, sales and marketing efforts are optimal at 4 to 6 touches. That's not true. They're optimal at an infinite amount of touches. Never stop if the product is right and you know you have demand for it on the other side, or you want to purchase it yourself. Number 4, you have to go direct to seller to win. No. Our best deals have come direct to seller. We've gotten lots of really good deals that have not come direct to seller. And if you want to be passive in hunting for off-market deals, having affiliates work for you is your best chance at getting a discount without you having to grind endlessly to be able to find that needle in the haystack. And then number 5, anyone can do it. Building an operation to efficiently sift through a haystack to find a needle is quite the effort and requires quite the skill set. Right? So do it if you want to commit to it. If you don't really want to commit to it, then find someone else to get you deals and worry about making money another way. Because guess what, guys? I have clients that come to me that make more money than me. Right? I mean, it's infrequent because I don't think we cater to the super high earner. I think we cater to the high earner. But we have clients that come to us that make tons of money. We have plenty of clients that make 7 figures. And we have plenty of clients that make $500,000 to $999,000. And they do so because of a special talent that they have that's unrelated to real estate. And they're just parking it because that's what an investment is. So you have to ask yourself, these clients know. The client that makes $500,000, the medical sales rep that makes $750,000 a year. I can't tell you how many medical sales reps I've worked with. They always make somewhere between $500,000 and $1 million a year, the successful ones. These guys get bread, right? These medical sales reps are not going to they're grinding their asses off. They're not going to put in all this work to find 1 or 2 or 3 lucky deals a year where they earn $50,000 of equity each, $100,000 maybe on the luckiest one, and then take themselves away from a job that makes them all this money. So don't feel like you have to get the lucky home run deal if you have another path to making more money, because that's all it is. Lucky deals are just you making more money. You get to decide how you want to make more money. It doesn't have to be in real estate. So those are the 5 minutes. Let's get some questions going, guys. See what you got for me. What do we got? I didn't bring my coffee in here too. I could use a sip right now. You know when you dry out because you started your day with coffee and then you use more coffee to re-lubricate? That's me right now. What does it mean to use a human voice in your mail piece? You want your writing to sound like a person is speaking to the audience. Right? In a one-on-one way. I do my best to use the human voice when I talk to you guys here. Have you noticed people get on video and it looks like they're reading off a teleprompter, or they sound like they're talking off of a script to an audience that is that has no character at all, right? That's disembodied from being a person. You want to talk to your people like they're people, like you know them to some degree, and you don't want to cross the line of familiarity where you're too colloquial and too familiar. You want to be professional in some ways, but you want to blend in a sense of what I have learned is called a parasocial relationship. You want to develop a parasocial relationship with your audience. It's exactly what I do on social media here, right? You guys don't know me. I have no idea who most of you are, but I get on the phone with investors who've been watching me for a while. They want to buy properties from me at some point, and they definitely talk to me like they know me, and as a result, I could talk back to them like I know them. There's no icebreaker, there's no pitch, there's none of that stuff. All right, so build a relationship through your marketing, whether it's written word, spoken word, video, graphic, whatever it is. So how do you find your buyers as a beginner? That's a good question. How did I find my buyers as a beginner? I literally went and bought a list of everyone who's purchased in a market in the last, absentee owned in the last year. It's the worst method ever. And then I marketed to them. It got me 1 or 2 buyers. Maybe it got me 1 person that actually bought from me, but they weren't good buyers that were able allow me to maximize my spread either, right? So the next step I took was I took to Bigger Pockets forums, and I was just typing shit up on forums. That was literally the beginning of this business. So Ace was making 7 figures before there was an Instagram page, right? I want to be very clear. This was a real business before, but we were grinding for buyers. There was some word of mouth. There was some of the marketing we'd done to this list. We were sending some email blasts to people that had HELOCs in California. We were experimenting with public records data to find buyers, and we had a lot of properties at this point. And we'd had buyers who had friends and they were bringing them to us. And then I started typing up messages on BiggerPockets forums, just like informing and educating and networking. I fucking hate networking in that word. But networking with people, and we'd get a couple buyers opting in here and there, right? But it was like manual effort on my part. I was doing demand gen. At some point I got tired. I said, I'm gonna make an Instagram page and just post like deals that we've done on it. And I'm gonna promote these actual deals. And I'm gonna get people to opt in. And that didn't work that great. I mean, it was okay. It was like better than BiggerPockets because I didn't actually have to work. I just had to spend money to do it. But if we didn't already have like the money that we did, it wouldn't have been worth it because the dollar per conversion was really low. And the buyers list really, really, really blew up when this happened, right? And really like when the TikTok days happened, like early 2020, short video. And I noticed short video was booming, so I'm like, I'm gonna make some short video because no one else is doing this real estate stuff really on it. So, and no one else is doing what I'm doing, literally looking for investors to purchase properties from me that are great deals, and we offer a great service. And I actually had a client tell me, he's like, hey, you have this amazing service and product that I was looking for a very long time, and I didn't know you existed. I'm lucky that I found you, but it wasn't very easy to find you. It was completely accidental. There's probably a lot of people out there that don't know you're out there at all, and it's your obligation to put yourself in front of them. So when short video came around, the buyers list blew up, obviously. That was the best way for sure. But I don't think the buyers list would have blown up from the short video, to be quite honest. If I didn't already have the grit and grind and expertise that came from doing, like already having done 150, 200 deals, and then sharing that in the form of like content coming from someone who really knows the business. I think that's what attracted all those buyers. So there was definitely that difficult uphill push of like learning to do deals the hard way to the point that you really understand the business, and then demonstrating to a much larger audience, the whole interweb, right? That you know the business. That's what blew it up. So there's a big answer to a very big question. So what else you got here? Come on, guys. This is the opportunity to ask me things that I shouldn't be telling you, and I've been answering. If you have to renovate a property you buy, do you find contractors on Google? No, full service management companies only. I tend to start with properties that don't need much renovation. The beautiful thing about this whole topic that we talked about today, hunting for the home run deal, is that you can target really good deals that have equity in them on the front end that don't need a lot of work. I mean, it's obviously easier to find discounted properties that need a lot of work, but also they're not that discounted because you have to attach a big premium to that effort, right? So I don't consider that discount at all. I consider discount from its as is, what could you sell it for on the market value, not how distressed it is and how much I could fix it up to add value to it. That's complete bullshit. That's getting paid to do work, to fix the deal, right? To do operational work. I want to get paid to do acquisitions work. Now, if you choose to get paid for doing acquisitions work, which maybe, like I said, it's not for everyone. My talent is, acquisitions work. But if you choose to get paid for doing acquisitions work, you could buy properties that don't need much. Start with management companies that are full service, that are willing to take it on because it doesn't need much at all. Maybe it's already occupied, and then you just build that relationship while you test them. Tenant moves, they do paint and floors for you. You make sure it's a good result, the right cost, the right timeline. You expand it further. Hey, are you guys willing to take on this property? This one needs a little foundation work. This one needs a roof and it has a vacancy that needs a turn right now. This one needs windows as well. So you kind of develop that relationship with these full service management companies, and you walk your way into bigger projects without absorbing a lot of risk of someone doing low quality work, taking forever and tying up your money, or charging way too much, which are things I think you shouldn't expose yourself to very, very early in this business unless you really, really want to be involved in that side of the business, which I know I don't. I'm a remote investor. I don't want to see these properties. And there is an added risk of delegation when you're not present, right? I mean, that's why our sales team is here in an office and I'm here with them, right? It's not because of micromanagement. It's because you want to be involved in these complex situations. So to lower the risk from afar, uncomplicate the situation. That's it. Hopefully that was a good answer. What do I discuss on my investor calls? That's a good one. So fortunately, we're in a position where demand exceeds supply. And I don't want to blame it on fortune. It's deliberate. I learned back in my biotech days I got some Six Sigma lean production certifications. And one of the principles they teach you to create a lean manufacturing environment is to allow demand to pull supply. It's called generating pull. I think I've talked about this on a live session before. Rather than pushing supply into the customer, you generate demand and you let the customer pull the supply, right? Literally request it, like bang down your door for the supply. Now, when demand exceeds supply, what you want to keep doing is you want to go get supply, but then you want to like pour fucking rocket fuel on the demand, right? And as a result, what we get is about 30 to 40 new investors opting into our investor list per day. I'd say 20 of them half of them have a minimum of $100,000 to spend or greater, which is what meets our minimum qualifications. Then they go through this kind of like vetting process, right, where they're allowed to see properties for some period of time. If they don't sign up for any, they get taken off the list. We only show about like 5% of our total investor list of properties that are available to us. So a lot of them don't even get to see properties, right? The ones that are signing up actively, and usually we get about 50 signups overnight per property. If I just throw out a recent average, about 50 signups in 24 hours per property we send out. Of those 50 people that we have not yet spoken to that have signed up, I'd say like 2 times or more, we have an account manager here that will set that call. So what you've got is a client that is very familiar with what they want and their level of interest in your product and us and our brand and our process and what we sell. They've seen it all. So when you get on the call, they're usually 15 to 30 minutes. And I think a lot of them are just fine at 15, but we end up talking shop. And you start with, I'm looking for 3 things, right, on these calls. The first one is I want familiarity with the customer. I want to understand their experience, their temperament, and who they are. And then I want their criteria. What do they actually want to buy? Because what I want to make sure is that a wide range of our product fits in their box, right? Not just a few of the things that we sell. Because if a wide range fits in their box, they're going to be likely to be interested often, which is the premise for engagement and frequent communication and certainty to close, right? When we communicate with someone often, when they're interested often, then we build a sense of confidence in their desire to close on a property, and they're more excited about the property and we sleep well at night. So that person is actually likely to buy if their criteria fits our product very frequently, not just one property every 6 months. But those 2 questions, like that's a matter of like 5 minutes of discussion. The next 10 to 20 or 10 to 25 is all Q&A on their part, right? So I go, cool, bring me questions after that. Whatever you got, I'll answer it. And those conversations range from, the state of the market, why we select the products we do, strategies when it comes to operating from afar, how to limit your risk in that. Sometimes they just want to know about our business a little bit more. Sometimes they want to share their financial position a little bit more and like seek out, my opinion on it. Whatever it takes to fill that 15 or 30 minute block that we've got scheduled, right? But I'd say most of the clients, since we like vet elite and we vet for savvy, these conversations don't need to be more than a few minutes long. Especially because they've come so far before we even talk to them. So hopefully that was a good look under the hood. I love giving you guys like a peek behind the curtains of this business and showing you the mechanics of it, because I don't think a lot of people are interested. I couldn't make short form content of it. It wouldn't go very far. But this is very much like a real estate investment firm and not a social media business. Social media business is great. It makes a lot of money, but not as much as the real estate investment firm. And I love to show you guys what it takes to operate and build something like this, because it took me years and years of effort to figure this stuff out, and lots of reps and millions of dollars invested, guys, and like so many hours. I couldn't even tell you how many hours. Not 8 hours a day, like nowhere close to 8 hours a day. So if I can take these little cogs and gears and gadgets that we've built and show you how we put them together, maybe you'll be able to take them and reassemble your own version of it, maybe with a completely different unrelated business in shorter form. Let me take one more, then I'll bail out of here, guys. I'm not going to talk about what do banks look for with financing, because that's a big question. Okay, what's the most units one of our clients has bought from us? I think in terms of like dollars usually and not unit count. I know I've had clients buy like $3 or $4 million worth of property from us. We've only been around for 5 years and really been selling the product we've been selling for 4 years. So clients tend to just come in, buy 500,000 to $1 million a year, and then they kind of go away for a little while. They'll go work on some other project, their business. One of my big clients is often the Netherlands, spending time with family. I think he has an ill family member, right? So he's out for a little while because while he's overseas, the bank doesn't want to finance him because they can't collect, right? If he doesn't like live here right now. Other ones they'll go like spend a large chunk of money at once. They'll go cool for like 6 months, come back, get ready to spend the next chunk. So I'd say like $3 or $4 million is probably, if I were to guess, one of the biggest spends. We have 2 categories of clients. And I tell my clients this all the time on the phone. I go, we're fine whichever direction you go. One category is the person that really wants to learn this business and they use our product as a way to cut their teeth without like having to really overpay for a turnkey type property because we don't carry inventory cost. We're just bringing stable properties directly from the seller to them. We make our spread. We're happy. We do all the due diligence. So we're kind of like training wheels for them, and they'll buy 2, 3, 4, 5 small properties from us or 2 or 3 bigger properties, and then just go off on their own and figure out how they want to do it themselves. So they use us to learn, use us for resources, use us for due diligence, that kind of thing. And then we've got the clients that are like, I'd say the higher earners who are looking for something really, really hands-off. They're the ones that stick with us and keep spending because whatever it is that they're doing is worth more to them than trying to like learn our business. They've already got something established, so they come back frequently, right? And they spend their money frequently with us because it's quiet. It's an easy way for them to just kind of stay focused on what they're doing. So that was the last bit, y'all. Thank you very much for joining me today. This was a fun session. I got to share something that I think I don't get to talk about often, but is an area of expertise. So got to be a little bit passionate about it and maybe give you some secrets that you probably don't see anywhere else on Instagram, probably don't see anywhere else on YouTube. If you see other videos that share the kind of things that I shared today, go ahead and tag me on them because I'd be pretty surprised. Of course, always appreciate your time. You're the reason that I'm here. You're making sure I get paid enough to do this for free. So I appreciate that. Guys, one more plug. Dude, if you're hunting for off-market deals and you haven't taken the Virtual Investor's Guide, you're fucking crazy. You guys are crazy. But I love you, though. Have a good weekend, y'all.